Hello and welcome to our analysis of long-term Bitcoin cycles. Today we will use Elliott Wave theory to interpret historical price action and speculate on the potential future. We will use a provided Bitcoin chart from 2011 to the present day, and the basic principles of this technical analysis method, Elliott Wave theory, suggests that markets move in recurring patterns that reflect investor psychology. The basic pattern consists of 5 impulse waves in the direction of the main trend and 3 corrective waves against it. Let's apply this to Bitcoin's history. First cycle, 2011 to 2015, looking at the chart. We see the first major Bitcoin bull market, which can be divided into 5 main impulse waves to 1, 2, 3, 4, and 5. This pattern reflects the asset's rise in its early years. Wave 3, as is often the case, is the longest and most powerful, showing the explosive interest in Bitcoin. After reaching a peak with Wave 5, the market enters a corrective phase, designated ABC. 5. This is the first major bear market. As noted on the chart, this correction was extremely deep, about 86%. This marks the beginning of a recurring pattern. Second cycle, 2015-2019, after the end of the first major correction. A new cycle begins, again structured as a 5-wave upward impulse. This cycle coincides with the period around the second Bitcoin, having and led to the historical peak in December 2017. Again, we see a clear 5-wave structure that ends the bull market, and again an ABC correction follows. And here we observe something familiar. The correction, as shown on the chart, is approximately 84%. This reinforces the idea of cyclicality, where every major uptrend is followed by a significant approximately 80% correction. Third cycle, 2019. Present and future projection. The third major cycle starts from the 2019 low and again follows the 5-to-3 pattern. The 5 impulse waves took us to the 2021 highs. The subsequent ABC correction led to the 2022 low, which was a decline of about 77%, again within the familiar range. We are now in what chart analysis defines as the 4th major cycle. We can see that waves 1, 2, 3, and 4 of the new impulse have already been completed, according to my analysis. We are currently in the 5th impulse wave. Analysts often use Fibonacci levels to predict potential wave targets. On the chart, we see that a potential target for the top of this 5th wave is in the area between $108,000 and $130,000, which corresponds to the Fibonacci retracement levels of 0.5 and 0.618. The most important thing in this analysis is what comes next. If the pattern repeats after the end of this 5th wave, we can expect a new, large, corrective phase, a BC. The chart projection suggests a potential correction of about 71%, which is fully consistent with Bitcoin's historical cycles. Conclusion: analysis of Bitcoin through the prism of Elliott Waves shows a remarkably consistent pattern that repeats itself approximately every 4 years, often in sync with the halving. Each cycle consists of a bull market driven by 5 impulse waves, followed by a bear market with an ABC correction, which historically erases about 80% of the value. While this method is a powerful analysis tool, it takes practice, and the market doesn't always follow a perfect pattern. However, this framework gives us a clear picture of the cyclical nature of Bitcoin and helps us understand where we stand in the bigger picture.